Hey, good morning. Let's go over today's trade plan. So in the overnight session, the sell side has been a bit more dominant, but the market is set to open near this 58.5 to 60.5 bull bear zone. And how the market responds to this area is going to help us establish our intraday bias. Now, in order for the market to put in any kind of sustained breakdown below 58.5 to 60.5, we will need to see broad market weakness and some decent and sustained downside momentum. And a lack of weakness at 58.5 to 60.5 can result in the market continuing to balance above that zone within the recent range. On the smaller time frame, a break above 62.5 would be a bit of a confirmation that buyers are now starting to step in, and from there we could see a move back up towards the previous VPOC and close and the pre-market resistance zone at 68.5 to 70.5. That's a spot where sell side could be active on first test, but we will need to assess the real-time momentum situation to determine whether the area is worthwhile to short. Beyond that, we have the initial resistance zone at 73 to 74.5, and that's really the main area of resistance on the day time frame. It marks the recent 3-day balance area high, and in order for the market to put in any kind of breakout beyond 73 to 74.5, we will need to see broad market strength and some sustained upside momentum. Given that the market is set to open near the 3-day balance area low, we need to be careful on any kind of breakout attempt beyond 73 to 74.5. So essentially, if we are seeing a lack of downside momentum and a lack of broad market weakness, the market could continue to balance between the bull bear zone and the initial resistance zone, and in order to take out the initial resistance zone in any meaningful way, we will need to see some decent upside momentum and broad market strength. And then on the downside, in order to take out 58.5 to 60.5 and get any kind of sustained breakdown, we'll need to see a lot of downside momentum and broad market weakness with the advanced decline line in negative territory and trending lower. And again, a lack of weakness at the bull bear zone can result in responsive buyers stepping in. Below the bull bear zone, we have support at 53.5 to 55.5. It's a spot where buy side can defend, but if the market is indeed in breakdown mode, then we don't have to stop at 53.5 to 55.5, and we could even expand the range lower into the 47.25 to 49.75 area where buyers can step in. So that is the market context today heading into the open. Let's see if the buy side can hold ES above 58.5 to 60.5. That will help us establish our intraday bias, and we'll take it from there.